The world is facing a series of challenges. I mean, in the wake, in particular, of Russia's war of aggression against Ukraine, which has caused additional uncertainty, additional inflation, additional increases in energy prices. And yes, you're right. I mean, some of these cost pressures have come off in recent weeks, but nevertheless, there's still a lot of scope for increased cooperation, increased collaboration to address both some of the short-term challenges and also, of course, to work together on some of the medium to long-term challenges such as the green transformation, the digital transformation, and making sure that we have a global market, a global rules-based trading system in good working order.
Well, let's turn to the economic outlook then. OECD 2023 forecast is for global growth?
2.2%. So that was quite our latest forecast was released in November, and that was a downgrade on our previous forecast. I mean, the situation has clearly been deteriorating, and with still risks very much to the downside. Having said that, some of the headline inflation numbers have been easing off, as you've just indicated, on the back of lower than anticipated energy prices and food prices.
Yeah. So let's talk more about that then, and also in terms of geographical distribution. It feels like one of the potential positives, tailwinds for the global economy is this reopening up of the China economy. How does that sit in with your picture?
Well, we certainly very much welcome the easing of COVID-related restrictions in China. So over the short term, it will come with challenges, and we're seeing heightened levels of infection, which are likely to have some short-term impacts, but over the medium to longer term, I mean, this is very much a positive in terms of making sure that the supply chains function more efficiently and more effectively, making sure that demand in China and indeed trade more generally resumes into a more positive pattern.
Do you think China's reopening and re-engagement with the world economy would be another inflationary impulse? Well, there are two ways to think about it, right? From the supply chain perspective, but then also from a demand perspective.
Well, I mean, one of the drivers of inflation was very much a supply shock related to global demand, global supply not being able to keep up with global demand, with some of the established supply chains not being able to service global demand as swiftly as was required. And so China coming back into the global market in earnest and supply chains functioning more efficiently will help bring inflation down. I mean, clearly, I mean, this is overwhelmingly is a positive.
And how long do you think it's going to be before Chinese overall level of activities resume to where they were pre-pandemic?
Look, I mean, that's very hard to assess from where we are now. We have to see how, obviously the current challenges are working their way through the system, but the direction is positive.